the many errors, or why many people fail in this industry is simply because of the three things I outlined yesterday. One, lack of knowledge or proper knowledge. The second being greed, not being able to tame your greed appetite. You want to make all the money there is. You don't have a trading plan. You're not disciplined to follow your trading target. And then the third one is impatience. A lot of us, we don't know when to buy. We don't know when to take a break. We don't know when to wait, and all of these things. Now, beyond this point, there is an aspect of trading that is a lot of people have, abused, or rather, taken, taken lesser, consideration. And that's the aspect of trading psychology. Okay. And I will just scratch it and then I'll go into the practice. Now, when we're talking about trading psychology, it has to do with how you tame your emotion. You know that, of course, in this space, you can lose money. But a lot of people, when they lose money, they tend to be aggressive. They want to get back the money by all means. By the time your emotion is not checked, you don't have the discipline of knowing when to stay off after making a loss or something, just to make sure that your entire psychology, entire emotion is checked and is balanced, then you are bound to lose more money. And this is one of the problems. Trading psychology is key. Of course, if you're going to ever get trained, you need to be able to understand trading psychology very much, okay? Well, maybe God helping us, we have the opportunity to talk more again. We'll talk about trading psychology. It's deeper than what I've just said, but I'm saying this to let you know that trading psychology is even more important than understanding how to trade, okay? Because there are a lot of people who understand how to trade, but they are cheated by their, psychology. They lose money or something happened to them. They are angry. They have a bad day. It happens, okay? And then your responses to the market becomes negative, all right? And so you're bound to have very negative outcomes as well. So trading psychology is key, all right? Now, where do we start from? Let's talk about trading. And I don't always like to be referred to as a Forex trainer or trader. I'm a financial market trader because, like I said yesterday, Forex is just about a currency alone. Forex is not very large. The Forex market is big, but when you're just talking Forex, you're just limited to currency trading. But we have a lot of things to are trading today, all right? Somebody who trades Forex might not be a crypto trader. You say, I trade Forex. You say, I trade crypto. Yes, you're all trading in the financial market, but the person trading Forex is trading Forex. Whoever is trading crypto is trading crypto. Somebody is trading commodity, who's trading stocks or bonds and all of that. They are trading all different stuff, but all of them are players in the financial market because why it is financial market, at the end of the day, it is finance that are being exchanged. It is money that you get or it's money that you send out. So, but this is where I want to start tonight. Now, if you are going to become a player in this market, all right, the first thing you have to deal with, like I said, is you have to look away from making so much big money because it's going to lure you into very unfortunate stuff. Just make sure that, okay, I want to do this. I want to make these targets every day, and just respect that decision and flow with it. Okay, but practically, what do you need? The first thing you need is you need to download MetaTrader 5, but that's not where to start. Where you start from is to sign up with a brokerage firm. I will say a regulated brokerage firm. There are a lot of brokers, or what we call Forex trading providers. There are a lot of them. We have Deriv, we have Handtake, we have Hot Forex, we have FXTM, we have a lot of them. We have Pepperstone, we have a lot of them. Now, it is not just about the broker. You have to find out if the broker is regulated by some certain bodies, most especially financial regulated authorities. For example, if it is like in Nigeria, you have to check from the website of the broker if they have license from Security Exchange Commission. Depending on the country, if it is in Europe, you have to check if they have license from ESMA, that is European Securities and Markets Authority. If it is, if they are also licensed by Financial Conduct Authority, or maybe by, if it is in Cyprus, call it Cyprus Securitization Committees, a commission, and all these people, Financial Market Authority, just check it out. It's always at the lower part of their page, license. Get to see if they have license. They're always license number. Why I'm saying this, I said it yesterday that I heard of one, in fact, came Port Harcourt. It's not a very popular broker, but they came up. I remember at the time they contacted me to, bring people that have trained, to, patronize them, that their spread is good, this and that. And at the end of the day, not somebody from me, but somebody signed up and made a lot of money, and they couldn't pay up till today. I don't know how it ended. So because if these things are regulated, they can easily be reported, and then you can always get your money. So please always play with brokers that are regulated. We cannot overemphasize that. It's key. All right. Okay. Then after you've signed up with the broker, some brokers will want you to do KYC immediately. So when you finish with your KYC documentation, sometimes they will need your bank for you to be able to withdraw. There are some that says before you can withdraw a certain amount of money after earning, you need to do your KYC. Sometimes it is bank statement. Sometimes we call this what we call PDA, proof of address. We have proof of address. We have proof of identity. Okay, if a national ID card, international passport, whatever, you just fill that up and get it validated, and then you can start. Now, after you've gotten that, get your MT4 or MT5 platform, depending on the app they want to use to route the transaction. There are some people trading with Binance. Of course, I know that there is KYC in Binance as well. And so all of this stuff. So it depends on the platform you've chosen to trade with, or the platform the broker provides you to trade with them. Now, I want to speak for what I have. I have done business with Handtech, with Hot Forex, with Pepperstone. Also is an Australian broker. I've done a business with The Reef, formerly binary.com. Okay, and from my judgment, this is very personal, it's a personal opinion. The Reef appears to be one of the most stable brokerage I've worked with over the years now, and that is because there is a lot of flexibility. You can get your money within 3-5 minutes. After making profit, you can withdraw, and if you choose to trade, synthetic indices, you can trade on Saturdays and on Sundays as well. Around the clock, unlike the Forex market where you trade 5 days in a week, and on weekends you're on break. Okay, so that's where we start with, so all of that. Okay, and then since this is just about Forex, I want to just explain something that will be easier for us to understand. Please, I would like to share my screen. I don't know if that is possible, just to explain. Somebody is raising hand. Can you just ask your question so that I can continue, please?
You are host already. You are host.
Okay, thank you.
Hello, good evening. Hello, good evening, family.
All right. I'm sure. Please. Okay, what are you saying? Sorry, please. Go ahead.
All right, my name is Bishop Paul. I'm the one that raised my hand.
Okay, go ahead, sir.
Thank you very much. I just joined and I heard you say something that if one is trading, synthetic indices on the real is better over the weekend, right?
Yes.
Okay, but I have a challenge. I'm still trying to understand how to get this out. But can you still help out, like telling me that time within the week? Because I've tried over the weekend sometimes. Make maybe $1, increase, and I'll lose like $10.
I'm sorry, your communication line is breaking. I can barely hear you clearly.
Why don't we take questions after you're done with the class, sir?
Okay, after the class, just keep your thoughts, sir. I want to respond. I'm sure you can see my whiteboard. I want to explain something to us, okay? Just because of the Forex stuff. Yes. All right. And I'm going to use Nigerian and dollar. All right, just like using Euro, USD. When you're trading currency, you trade in pairs. You can't trade just one currency. You have to trade Euro against United States dollars, or maybe Japanese yen against Australian dollar, or maybe you're trading Swiss francs against Canadian dollar, just like that. So this currency comes in pairs. And I told us yesterday we have 8 major pairs. According to the United Nations, we have about 180 currencies that have been validated, which means there are a lot of currencies you can trade with. But there are 8 major currencies. We have the euro, the pound, the Great British pound, the Great British pound, the euro, the United States dollars, the Canadian dollar, the Australian dollar, the New Zealand dollar, the Japanese yen, the Swiss francs, right? That's it. So we have 8 major currencies, and we have, those are all major. We have minor currencies, all right? And then we have exotic peers and the rest of them, okay? Now, I told us yesterday why they are called major currencies, because they form the core of the inter-exchange, the interplay in the global economy. Having said that, I want to show us something. Now, these currencies are quoted in pairs. It means that, for example, please, I'm not very good with drawing this thing, so I'm going to be drawing, this is Nigerian Naira. I just want to explain something for this, and then we'll move forward. Nigerian Naira against United States dollars. I want to explain something. Okay. Now, this currency is in code. Let's assume we want to trade Nigerian Naira against United States dollar. There is always a chart for you to do your analysis. But I want to explain this anatomy first. Now, the currency, the Nigerian Naira is your BASE, your base currency, all right? While the USD is your quote currency. So you are quoting the US dollars against the Nigerian Naira. Okay. Now, this is the next thing you will see is something like the price. For example, I don't know what the exchange rate is, but I had Dr. John, I've not checked today. So let us use 557. Let's use 557. And sometimes it will have, we can use it to be 559. Okay. Just to explain something, please stay with me. 559. Now the 557 is called the bid, the BID. Okay, it's called what? The bid. While the 559 is called the ask price. So the bid price is the bid price is the 557, which is assumed to be the current exchange rate. Now the 559 is the ask price. That's the price the market is throwing at you. That is the general price for the market, right? And the bid price is the price you are willing to, to sell. Okay, but there is something I need to explain here at this point. All right. So now, what this means is that anytime this currency is quoted like this, and you have 557, just forget the 559. I'm trying to explain bid and ask price, okay? Now, what this means is, it means that you are saying that you need 557, Naira to buy, sorry, what did I do? This should be the other way around. Sorry, I made a mistake. This is USD rather. Sorry. I wrote the quotes wrong. Sorry. Okay, I don't know what I was. Okay, so it is actually USD. You're trading USD against Nigerian Naira, and that's what is happening right now. Okay, against the Nigerian Naira. So now good. This is how currencies are quoted. I want to use this to explain it, since we are Nigerians, or majority of us are Nigerians. So what it means is that you need 557. Behind all this code, there is always an invisible one here. That one is not always written, but that is what it means. So it means that you need 557 Naira to buy $1. Okay. So in this case, if you say buy Euro USD against Nigerian Naira, your projection means that. Hello, please, can you mute your mic except you want to ask questions? And please let questions be asked at the end of the class. Now, please, let's pay attention. So for those that are trading and for those that are newbies, I'm trying to explain something to us here. So when you see this kind of quote, maybe it is Euro, USD, Canadian dollar, whatever is quoted there, or as the case may be, all right? What this means is this, that you are actually, you want to use 557 Naira to purchase $1. So this is the current price of the exchange rate between Naira and dollar, okay? So if they now ask you, so how many dollar will I need to use to buy one to buy 1 naira? How many dollar? How many quantity of dollar will I need to buy 1 naira? All you need to do is to put 1 divide by 557. You will have 0.0000 stuff. Okay, that's what you will need to buy 1 naira. So, but this is actually what it is. So when you see this kind of a quote system, remember that the USD is the base currency, the NGN is the quote currency. And so anytime you see this kind of quote in any kind of asset, what it means is that you will need 557 naira to buy 1 USD. That's what it means. So that's what it is. Now, the difference is now remember I talked about lot size yesterday, the transaction unit. The transaction unit for whatever transaction you want to use. It is your lot size that will determine how much money you're going to make from whatever transaction. Okay, let's assume that is not very clear. So let me share the real dashboard so that it will make more sense. Okay. Okay, now look at this. I'm sure you can see the left panel of this screen. This is a Hot Forex MetaTrader 4 platform, desktop version. If you see what you see, you see USD CHF. The USD that is by the left hand is the quote, is the base currency, while the CHF is the counter or the quote currency. The base currency is the one by your left, the right is the quote or the counter currency. The bid price is usually less than the ask price. The ask price is the price the brokers are giving to you. Okay, the ask price is the price the brokers are giving to you. Now, why is that so? Is usually because the ask price is the offer price. That is the price they are willing to sell that, to sell that specific currency pay in the Forex market. So at that price, at your ask price, you can buy the base currency, right? But when it comes to the bid price, which is the price at which the market is prepared to buy a specific currency pay in the Forex market. So when you are using the bid price, you as a trader, you are selling the base currency. When you are using the bid price as a basis for your transaction, it means that you are selling your base currency. In this case, the base currency is US dollars. Okay. So for example, if we have a quote like what I just showed us, that US dollars against Nigerian naira to be 557, the bid price in this case is actually the 557 because the bid price is the selling price. Don't forget that. While the ask price is the offer price, the price that the market is willing to offer you, however. But the selling price, the market selling price is the 557. This means you will need to sell, it means you need to sell 1 US dollars to get 557 naira. In other words, you need to use 157 naira to get 1 US dollars. Okay, so now this is how this thing works. But let me say this. When you come into the real practice of trading, you don't even need to look at all this bid price and ask price. Your concern really is not here because this is not where it matters. This is just for explanation purpose. Your concern is what happens at the left side. I'm talking about this aspect. This is the prices. Okay. Now the difference between these points, the price between this point and this point, when you take the difference, when you subtract the difference, is when you have the pips. So if we now say, for example, please follow me closely. For example, this is 9. This place I circle is 9. That is 0.90119. Okay. So if I now say that this market is going to go up, which I'm going to explain in detail later, to this price, that is to 90440. Okay. If I say that market is going to go from where? Let's just say 90119, and it's going to get to 90440. If you subtract 90440 from 90119, you will discover that it's about 321. So the difference between that point and this point is the pips. So the pips is about 32 pips when you exclude the last digit, or you can just call it 321 points. So the market has moved 321 points, or you can say 32 pips or 32.1 pips. Now, when that happens, It means that if you use one lot size, one standard lot, and you multiply the standard lot by that pip, you will make, now one standard lot, one pip is equivalent to $10. Don't forget that. So by the time you multiply by 32, then it means $10. Since $10 is equivalent to one pip, it means $10 multiplied by 32 points. That will give you 320 pips. So that's how you make progress. So how you make profit is when you determine the difference in prices. And the only way this is done is when you can speculate if the market is going to go higher or it's going to go lower. Just like when you speculate the price of coins, that I'm looking at coins, like what we are doing with Nigerian Naira now. There's a speculation, actually technically based speculation, that it's going to get to 1,000 Naira. So we also have the Nigerian Naira US dollar charts too, where you can also see the current price of dollars. Okay, people trade it. It's just that it's an exotic pair. It doesn't really move the way it should be. Right now it's moving because every day the dollar against Naira is increasing. Okay, so having said that, so this is just what happens with the currency trading. You can't trade the currency just by trading one currency. It means you have to, it's always two currency pair. It means that one currency at a time has more value than the other currency. So you are trying to determine their differences, the price differences, or the fluctuations in prices. And then you are picking your money on the side where you feel that price is going to go higher or go lower as against the other currency. So that's what trading is actually about. But now let me say this, very important. You don't just do that by looking at your chart and doing abracadabra. You need a lot of knowledge, most especially technical knowledge. Now, when it comes to Forex, please listen carefully. Why I have traded Forex for the past, this place I've been around for the past 5 years plus now. And I started with trading Forex, okay? Now, with trading Forex, yes. And the thing is this, if you are going to be a successful Forex trader, you need a lot of knowledge, a lot of information than being maybe a synthetic or commodity trader. I'm going to explain much later. Now, there are 3 ways you can analyze the Forex market, or there are 3 factors that regulate or that control the Forex market. That's, I'm talking about Forex, not financial market, but Forex market. Now, number 1 is there is a technical part of it. All these diagrams and drawing price actions are technically based. And then we have the fundamental factor, fundamental aspect of it, which means the ones that has to do with government policies, inflation rates, and all of that. Those are the ones that also determine if dollar is going to rise, if there is uncertainty in economy, is inflation, or whatever it is. Those are core fundamental issues. And if you have an understanding of fundamentals, it also help. It will help. In fact, if you don't understand the fundamental aspect of Forex, you will not do very well in trading. You're always going to be caught unawares. For those of you who may have a little knowledge, there's what we call news trading. News. We have 3 types of news. We have red folder news, we have yellow folder news, and we have we have that is high impact news. We have the medium impact news. We have the low impact. Always associated with red color for high impact, and then orange color for medium impact, and then yellow color for low impact. That's news. And what trigger news is fundamentals. What is happening? What speech is Donald? What is Joe Biden saying? What is he saying about inflation in America? What is he saying about unemployment rate? What is he saying about NFP, non-farmers payroll? So all of these things are fundamental triggers, and it determines how currency flows. Because since these currencies, these 8 major currencies plays around within the economy, global economy, anything that has to do with government, that is tied to this currency is going to affect the way it flows also. Okay. Now, Nigerian Naira depreciation is not a technical problem. Frankly speaking, it's a fundamental issue. It has to do with government. It has to do with what's happening in Nigeria. It has to do with imports, exports. It has to do with current, insecurity realities here, and that is causing a lot of foreign investors to pull out. So these are the stuff that makes Forex a little bit difficult, not necessarily, but difficult. Now, I'm saying this so that you get to know that if you're going to trade in this space where you need to, focus on 2 currency pairs to determine which one is going to have, a higher value, against the other one, you don't need just the technical knowledge. Please listen carefully. You need to understand the fundamental aspect of it. And then the third one, you need to understand the sentimental aspect of it. So there are 3 factors that control the Forex market space: technical, fundamental, and sentimental. Now, but when it comes to other currency, Okay, for example, crypto is also triggered by fundamentals. Elon Musk will just tweet something about a particular coin. Before you know, something has happened to that coin. These are stuff we're talking about. People, government policies, people can influence these things, right? Now, but there is a market space that is purely technical. Whatever happens in America, in Japan, does not concern it because it is not a currency-based market. It's not a currency-based instrument. It is purely synthetic. It is purely automated. It is purely an algorithm-based. And that's where I am playing right now. And for me, it's safer. If the technicals are good, it's fine. If the technicals are not good, you stay out, provided you have you understand how it works. So having said that, that is just what happens. Let me show you the other space I'm talking about, okay? And that will be this one. I told you that I trade with different, that this one was for, now look at this one. This is different. If you check what is here, on this other space, here, the other time we have what? We have currencies, remember. But this time around, we don't have currencies. What we have here are synthetic. We have indices here. And these indices are synthetic. Okay, now whether there is bomb blast in America, whether there is whatever, even though Biden dies, unfortunately, God forbid, but it doesn't affect this particular market. It's not tied to fundamentals. It's purely technical-based market. If you understand your technicalities very well, you're good to go. And what is the advantage of trading in this space? Please, I'm just telling you so that when you want to make your choices, you will decide by yourself. You can trade on Saturdays and on Sundays. You can make withdrawals fast enough. If you're trading with other brokers, sometimes it takes 24 hours for you to get your money, except you're using Skrill or maybe NetTeller to do your withdrawals. But if you're going to go through your normal bank route, it takes 24 hours. Sometimes there are times that takes 7 days, 7 working days. Are you getting it? So this is just the difference. So when you're playing in the synthetic market, the people hosting, the broker hosting this privilege of these kind of instruments are derived, formerly binary.com. There is a lot of privileges. So you don't get to be afraid of news. For those who are trading Forex, you need to be careful of what is going to happen every first Friday of every month, all right, which is NFP, or maybe you're waiting for, what is his name again? Tom Poland, who is going to make a news at 2:30 p.m. Before the London session, or maybe, sorry, before the New York session, all those things. So every time you have to be on Bloomberg TV, watching what is happening. What is CNN reporting? What is Bloomberg TV saying? So when you're trading, the Forex market, the fundamental influences the technical market. Even though the technical market is overall, but the fundamental influences it. But in this particular space, my chat is shared. Somebody is asking us to share chat. I don't know how many people can see my screen. Somebody is saying I should share the chat. I think, I don't know. I don't know if you cannot see it. How many persons can see it, please? Let me know. Okay, thank you. So when you are playing in this space, you get to do away with fundamentals. You don't need to worry your head about fundamentals. So that's it. But that's not where I am going. All right. So with this one, you don't necessarily need to worry your head about of course, in all bid and ask, that is just for its market, normal market sentiment, what I would call market frivolities. The most important thing is to understand your lot size to use, understand when to buy and when to sell. Please, I want to make a very important statement, and I want you to listen carefully. I'm sorry to say, but I don't know. I'm a Christian by God's grace, and although we want to make money, we have to be sincere with ourselves. I had a certain news. I'm sure we are all here. I don't know if I'm supposed to say this, but I'm led to say it. And I want to encourage you. You don't need to get trained under me, but get trained. Make sure that somebody in your family is trading Forex or is trading the financial market. Because if what is happening or what we are hearing, that you need to get vaccinated. We know how this vaccine thing is going. Apologies to those who have gotten the vaccination already. But for those who have not taken it, and maybe you are in that school of thought that you are not supposed to take the vaccine, and maybe you are a government staff, maybe you're working, a time will come that you will need to take it before you can keep your job. What happens then? What happens then if you are not doing business? So it's a serious call that you have to find something that you're doing, whether you're running an investment, whether you're trading by yourself, do this. Because I saw a report, I have some students in UK, I'm training some people in UK, a whole lot of them. And then I saw some reports that in some countries now, it is compulsory. If you're not vaccinated, you can't go to work. You can't, that's in some countries now. I was just talking with one of them this evening, and it's traumatic. I think just recently, I think in Italy, it's just a case now in Italy. And so it's a serious issue. And these persons, they need that job to survive, to keep their family. And I said, the only thing that can give you that leverage, that freedom, is if you're trading the financial market at the comfort of your home. So that's why it is important. And I want to thank Dr. George for bringing this opportunity. I want to appeal. Forget what people say about Forex. At least do it by yourself. And I'm not saying that you should make $100 or $20,000. No. Start with making $5, $10. Over time, it will make sense. Don't want to make all the money there is. Just make little by little. The problem with us is that we want to make so much big money at a time. No, it doesn't work like that. If you make 10, 5, 10, just like that, but consistently, by the time you check at the end of the month, it's bigger than some salary that governments are paying people and keeping people in a white collar slavery. Sorry to say, but that's the truth. All right, so away from that. Now, I had talked about this particular space. Now, there is something I want to say now. If you're going to learn trading, please take note of these things. I may not have time to go into them, but I told us yesterday that the financial market can be manipulated by the institutional traders, that is the commercial banks, the endowment funds, the hedge fund traders, and the rest of them. Why? Because they have a lot of money. Now, look at this chart. Whatever move this price from here to this point. You see that movement? Whatever make price to move from here to here is serious amount of money. You as a retail trader, you don't have that kind of money. I don't have that kind of money to push this market. But we can copy. We can copy their trade. We can snap their movement. Because what moves price is volume of money. And I told us yesterday, it takes about $100,000 to move the market by 1 pip. Let me give you an example of 1 pip. From 10 to 11. The difference between 10 and 11 is 1. So it's from the market to move from 0.10 to 0.11, it takes $100,000. How much do you have? How much are you trading with? So there are people who have that bulk of money in billions of dollars. Because if the daily turnover in the financial market is about $6.6 trillion daily, you can imagine the kind of amount of money that is played there. So you don't have the money, but you can trail them. You can follow their trail. And that's why understanding these things, these market patterns are important. If you're going to trade, please make sure you go learn this thing. Number 1, learn SMC. These are core technical stuff. Smart money concept. Number 2, learn about flag patterns. Number 3, learn about Elliott wave. These are market patterns. Number 4, learn about divergences. These are pure price action based pattern that helps you to predict or helps you to determine the flow of market, where the market is going. Learn this stuff. Learn head and shoulder patterns. Learn how do we call it? Other flow, other block, all of this stuff. These are core market patterns. Don't depend so much on indicators, not because indicators don't work. It works. But indicators are lagging. They lag. It's after price has moved, indicator follows. Indicator is a copycat of the original version of price. So learn the core patterns if you're going to succeed. And let me tell you how to do these things. You don't need to learn all the risks at once. A lot of things, a lot of information in the market space. There are people who learn about, we call it harmonic scanners, or we call it shapes, whatever. There are a lot of information, there are a lot of patterns. But your profitability in this space does not depend on the so many information you have actually. It's the few information you have and you understand. So if you learn 3, 4 patterns and you understand what that pattern gives, because the essence of learning this pattern is that this pattern is market languages. They help you to know, for example, when you see a certain kind of divergence, maybe regular divergence or hidden divergence, it tells you where the market is going. It almost never fails. So when you learn it, so the pattern is a sign, is a signal that something is going to happen. I give us a kind of this kind of example. If you're about leaving your house and maybe you start noticing that there is thunderstorm, there is lightning, and most likely the cloud is becoming darker, it's a sign that there's going to be rainfall. So what do is you pick umbrella. So that thing you saw, that cloud change and all of that is a sign that, oh, there's going to be rainfall, maybe shortly. Now, the same thing happens in the market space. There are indicators, what we call price action indicators or market pattern indicators, that helps to let you know where the market is going next. You follow. That is purely technical. Now, when you come to the fundamental aspect, there are some news that you will get based on previous indices or previous judgments. It will help you to know that last time when this particular news and this information was given, this is how dollar reacted. There's a high possibility that this is always, history will always repeat itself. So this is what's going to happen again. Okay, so with that information, you'll be able to know where to pick your money, whether for dollar or against dollar. That's for fundamentals. So that sometimes you need to pay attention to news. That's for those trading currencies. So when you're trading in this space where it's not influenced, where your market decision is not influenced by fundamentals, then all you need to understand is market patterns. We have Elliott wave, we have divergence, we have flat patterns, head and shoulders, we have SMC, we have other block, we have other flow. They are different. We have other ones. We have what we call market patterns, shapes, and the rest of it. All right. So this is what it means to succeed. And let me say this very quickly too. I always say this. Your profitability in the Forex and the financial market is not tied to the many assets you trade at the time. I want to say that again. Your profitability in the financial market, whether you're trading crypto or you're trading bonds or stock or whatever you're trading, does not depend on the many of those instruments you trade. You just need to pick one or two or three at most, and you focus on those ones. That is what defines focus. So if you say, I want to master Euro USD, how it behaves, Great British Pound USD, I want to trade only 3 currencies. When I used to trade currencies, I used to focus on only 4, including gold. And I know how they move. I've studied them over the years. But a lot of people in our time, because of the problem of greed, maybe your Euro USD has not aligned with your pattern for a buy or for a sell. You jump into Japanese yen, maybe Australian dollar, Japanese yen, which is not part of your asset. You'll not be trading it. So it's strange. Although there's in Forex, there's what we call a currency correlation, right? If Euro USD is selling, it definitely means that USD CAD will be buying, something like that. We call it currency correlation. So when you analyze one, just find for the correlation of that currency and buy and sell. If you're buying Euro USD, for example, if you go to USD CAD, it must be selling. It is very rare that the both of them will be buying at the same time. So that factor is called currency correlation. So there are things like that. But when you stay on 1 or 2 or 3 maximum currency, you're going to do better and you're going to do well than people who just trade everything they see just because they're looking for opportunity. No, you don't do for opportunity. Wait for opportunity in the market to come to you, and then you hit it hard. There are times you have to wait for 2-3 days without trading. That doesn't mean that you are not doing the right thing. In fact, one of my people will say, if you're not trading, you're making profit, because if you trade at the wrong time and you lose money, you've lost money. But if you did not trade, that money is preserved. You have to wait for the right time. So you see, please, the likes of George Soros will say that trading is 10% buying, 10% selling, but 80% waiting. It requires a lot of patience. You have to wait for the thing to come to you, you hit it. You don't just buy or sell. There must be reason, there must be technical reason backing your decision to buy or to sell. Fundamental reason is not just enough. There must be core technical reason, and that must be backed by market patterns for you to buy or for you to sell. Whether you're selling cryptocurrency or whether you're selling whatever you're buying or selling, there must be reason. And this reason must not just be based on fundamental speculation or DSA. You have to check your chart. What's the chart saying? Because the charts, when you see this platform represents accumulation of how do we call it? Of behavioral patterns over a period of time. So it captures behavior. It does history. History repeats. Now, there are two participants in every market, buyers and sellers. It is either you're going in to buy or you're going in to sell. And according to economists, market is defined as a place where two people come together for the sole purpose of, where buyers and sellers come together for the sole purpose of exchange of goods and services. So you must either buy or sell. And if the opportunity for a clear buy does not come, please wait. There's no opportunity like that. If there is no opportunity for a clear sell, please wait. Don't be greedy because you want to meet targets. Your target is not as important as keeping your equity. So don't, that's the problem. But the day you are able to deal with this, and then you're able to discipline yourself such that I have a reason for buying. And even if for any reason it violated, something pushed you, something tangible pushed you that, sponsored that decision. Not just by, let me buy because they are bullish candle. Green candles are buyer's candle, so they're buying now, so let me just join. No, sir. Or because it looks like this market is selling. There are a lot of red candles coming down. Let me also follow and sell. No, sir. You could be selling at the wrong time. Let it be purely based. And let me say this. There is no way you will know when to buy or to sell if you don't understand the different market patterns. And those are SMC, smart money concept, divergences, flag patterns, and Elliott wave. You understand head and shoulders, and all of that, etc., etc. So that is what happens in this space. So if you're going to succeed, forget the big money. Think about to make small. Above all things, adequate knowledge is key. And if you do this, think about making $5. I'm saying $5 every day. And you do that for 30 days. That's $150. $150 is about 167,100 naira as of today. If you do that at the comfort of your home, and sometimes it will take you just about 10 minutes to make $5. Sometimes it takes you 1 minute, sometimes it takes you less. If you do that and you're disciplined, I say, okay, me, I just want to make 5. It will be better. It will add something to your pocket. Because I know there are a lot of people who have smartphones and they're the one feeding the smartphone, Instagram, Facebook. They keep putting data, putting money in there, and the phone is not making money for them. Well, in the words of Robert Kiyosaki, anything that takes money away from your hand is a liability. So some of us, we have phones. Apart from those who are using it to advertise and to do businesses, some of our phones, as useful as the phone is a liability to us because it makes us spend money and the phone is not making money for us. And that's the honest truth. So one of the ways you can engage that your smart device is to trade with it or to trade on it. And like I said, it begins with choosing the right broker. And then you sign up. And after that, you get the knowledge. And then you begin to play. I'm going to stop here for tonight. If you have questions, you can ask.
Oh, thank you, sir. Thank you so much, sir. Apparently, it's obvious that we need to learn a lot about this FX market. And I really thank God that the eCooperative platform is willing to take us through a process. So one of the things, for those of us today that we need to pay attention to. Some things about a technical analysis, that is how all of these things just, those waves you're seeing, they mean something. The patterns, the trends, and how to also align yourself and succeed. And then he also said something today that we don't have to trade in Forex, the Forex market. They can be affected by news, and they don't also trade on Saturdays, and also opened up another platform that he called the synthetic market. The synthetic market is a market that is automated and they work on Saturdays and Sundays 24/7. You can also trade in that space. You trade with things like boom and crash, volatility 75, and other assets like that. And it's exciting, something that if you learn yourself, you can succeed. What we're going to do is in the 30 days fit gear come back, and this time when it comes around, he'll the ecooperative management will discuss with him and find a way to give us at a very discounted amount so that those that truly want to learn FX market, so that nobody deceives you anymore. Nobody takes your money and runs away. Nobody tells you he's trading Forex. And meanwhile, he's not doing anything with Forex. He's taking your money, he spent your money, he's not doing anything with Forex. Know what the person is doing and all of that. So I'm sure in the coming days, we will discuss with him so that we can do some kind of trainings. Be $500 or $200. That knowledge can pay for the knowledge and learn how to go step by step, put their 50K, put their 20K, put their 30K. Let me ask you a question, sir. How much do you need to start in the, whether it's the financial market, whether it's the currency market or the synthetic market? How much do you need to start in the FX market? What's the minimum amount if you're trading yourself directly?
Okay. When we say minimum, first, the brokers will tell you can start with, there are brokers that will allow you to fund as little as $10. Okay. There are brokers that will say you can start for trading with us with as low as $10. But when you want to trade, let's assume you want to do an investment. Sometimes people invest 50,000. 50,000 is about $100 plus now. So my recommendation sometimes would be start with that $50 and above. When you start with $50, that does not mean you want to make all the money there is. You can start with $50 and just say, okay, I want to make $2 just to grow, because that one is for you to grow that equity. That's in the case where you don't have money and you just want to start. But if you have up to 100, 200, 300, 500, 1,000, 2,000, 3,000, even $10,000, you can, whatever you have, but my minimum recommendation would be $50. Just start somewhere. Yeah.
$24,750. If you're doing $50, $2 a day, $2 times 30, that's about $50. That means that if you are doing even $2 a day, all things being equal, you can make up to $60 from your $50 investment while your $50 is still there. That's even almost 100%.
It's
but
possible.
If things
that
don't
is
work
true.
out, it's possible. But it is possible that the market is not all right every day. Out of 10, now do, let's say 15 days.
Even if you do $30 or even 25,
even $25 in the 30 days,
is 50% return on investment from your investment. So it's still better than putting money with a company that will run away later. You get the picture. So the choice is always in our hands.
All right. So hopefully we're going to get you to come back and then today. Somebody is saying, please, how can I get materials about market patterns? All right, you would have to wait until we are ready to do that training. Secondly, please, how would it be possible for me Forex trading class? Because I really want to learn this passionately, please. All right, Gabriel, I'm sure that by next week or so, get started. You're going to have to pay some money though, but you'll not be as much as you pay normally. We'll get to that conversation. Today was not for us to tell you to register or tell you to invest. Today was just to enlighten you, to debunk those things that you have about FX not being real. All right.
All right. I don't know if there are people who have